Today, I want to talk about a mega short squeeze that's happening right now in MotorSport Games. Ticker symbol MSGM, which is currently up over 1,800% in the last few days. I want to talk about what triggered this squeeze, but also what might happen to AMC as a result in this current crazy volatile market. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Enables tweeted this photo of MotorSport Games, which, as you can see, is up crazily over the last few days. It's been so volatile that Robinhood even issued a warning, saying this stock has recently experienced elevated volatility. And we can see from this article on MarketWatch that MotorSport Games' stock has rocketed more than 600% on massive volume after satisfying NASDAQ's listing requirements. MSGM stock price increased over that $2 listing requirement, thereby regaining its listing standards, and now it will not be delisted from the NASDAQ. This is simply another stock where the shorts have lost, as they didn't manage to get the company delisted and relegated from the NASDAQ. Instead, they managed to regain those listing requirements. And as a result of regaining compliance, MSGM blasted 662% higher toward a 10-month high on heavy volume. Now, there's actually something really interesting about MSGM specifically. It says here the company also satisfied the listing requirements as a result of a new share issuance to Alumni Capital. This is obviously somewhat similar to AMC issuing shares to Antara Capital. And on top of that, it says the number of shares outstanding had also been significantly reduced when it affected a 1-for-10 reverse stock split on November 10th. Now, in terms of how that reverse split and the new share issuance impacted the MotorSport Games' stock over the last few days, we can see that MSGM has a market cap of 43 million shares post-split. And over the last few days, the MSGM stock has increased from $2.50 per share at one point yesterday, hitting new all-time highs of $49.50. Now, we also saw some crazy volume, over 50 million shares traded and over 14.5 million shares yesterday. Now, obviously, that's more than the entire float of shares traded in one day. Is that elusive of naked short selling, or is that elusive of day trading? I'm not 100% sure. But what we can see is that after their reverse split, the stock price didn't just increase by 10 times, not just by 20 times, but nearly by 25 times its original post-split price. That'd be like AMC increasing from a post-split price of, say, $30 per share all the way to $750 per share. Now, obviously, I'm not 100% sure exactly what the post-split price of AMC is going to be. Is it going to be $20, $30, $40 or $50 per share? But regardless of what the price is, I'm sure you can figure out just how high that number will be if you multiply it by 25 times. And again, this is a stock that potentially doesn't even have any synthetic shorts. The short interest of this company is only around 8%. And therefore, after AMC's reverse split, it may not just increase by 25 times, it could increase by 50 times or 100 times the post-reverse split price. However, I do think that the more heavily shorted stocks we see running up, the closer we get to the AMC squeeze. Over the last few days, we've seen a number of heavily shorted stocks like Carvana, like Coinbase, like Bed Bath & Beyond, and many others that have been running up massively over those last few days. This obviously stresses the shorts more and more and more. And obviously, if they get margin called on their Coinbase position or margin called on their Carvana position, it will effectively margin call the entire fund, meaning they'll be liquidated, meaning they have to close out of their AMC and GameStop shorts. Effectively, the run-ups we're seeing in these stocks like Carvana and Coinbase is the shorts closing out of their short positions because they're taking on heavy losses. Obviously, when they close their shorts, they buy actual shares, pushing the price up further. Now, you may be saying, Tom, the DTCC, the SEC and these hedge funds will simply never allow a short squeeze to happen. But again, as Ham Shortkiller said, he said for those who think they won't allow squeezes to happen, enjoy MSGM that increased from $2 to $70 plus. Now, you can say these hedge funds and market makers simply won't allow a short squeeze, but at the same time, if they had that much control over the market, wouldn't they just simply not allow a market crash? If they really could control every stock on the market to the penny, wouldn't they have just avoided the 2008 recession and the 2000 dot-com explosion? Surely these market makers would have seen the stock market down, say, 10 or 20% and said, oh, no, sorry, actually the stock market today is going up by 20%. Crash averted, recession averted. And again, if they could really control every single stock to the exact penny, wouldn't they have just bankrupted AMC months ago, if not years ago? Surely they would have shorted AMC down to 1 cent per share by now, they would have had it delisted, and they would have won months ago. Also guys, be sure to join me on Moomoo if you haven't already, using the link in the description below. You can currently get 15 free stocks, entirely commission-free trading, and free level 2 market data. Moomoo is also very easy to use and has a very simple and clean UI. It also has tons of technical indicators and advanced charting tools. But Shrub GPT also issues a warning to be careful about random stocks exploding and potentially squeezing in the current market. He said we're entering the next phase of Gothalox, where Ponzi CEOs and other grifters will soon take advantage of the squeeze in their share prices and issue a ton of shares to shore up their balance sheets and pay themselves handsomely. Over the last few days or the last couple of weeks, we've seen a number of CEOs coming out to say they're going to fight short sellers, which has potentially caused a run up in their share prices, where they could just be issuing new equity or paying themselves handsome dividends. As a prime example, in the pre-market this morning, or as has just opened in MotorSport Games, the stock price is down massively after they've just announced a massive 30% increase to their share capital. And now something else really interesting is this tweet from StockSense Frank. He said the FDIC is using $125 billion in cash reserves to insure $9.9 trillion in deposits. We can see here in the deposit insurance fund, they have insured deposits of 9,926, which I think is recorded in billions of dollars, so it's 9.9 trillion. But the actual fund balance of that insurance fund is only $125 billion. Which obviously means the FDIC on its own cannot pay out in the event of a market crash or in the event of a squeeze, and will need to recruit the help of the members of the DTCC. This is obviously where that $67 trillion insurance policy comes from in the DTCC, which is simply all of the cash assets of all of the members of the DTCC combined. And as StockSense Frank tweeted, he said when a market crash occurs, they will use the nation's checking and savings accounts to cover bad debt, leaving the population with an IOU issued by the FDIC. Only you won't get US dollars in return, you'll get a CBDC credit. Basically saying that when a market crash occurs or when the AMC and GameStop squeezes happen, they will take the cash from these ISDA banks, such as taking the cash from JP Chase and using it to pay for the squeeze. And therefore these regular everyday Americans that will have their bank accounts raided by these ISDA banks will simply receive a post-squeeze IOU or a post-crash IOU. If anything, the market crash or the AMC squeeze is actually the perfect excuse for the government to introduce the CBDC credit. As this article notes, it says FDIC bankers have been discussing bail-ins or bailouts to deal with impending market collapse. That was published on January the 2nd, 2023, so obviously even the FDIC and the wider government know that a market crash is coming. And that is why, if you haven't already, as Bigham suggests, now is probably a great time to get out of those ISDA banks. And also to show just how in trouble those ISDA banks are, we can really look back to the reverse repos of 2008. This tweet says that JP Chase, Bank of America, Citigroup, Wells Fargo, Goldman Sachs and Morgan Stanley were the recipients of 63% of the Fed's average daily borrowing, representing about $500 billion at peak periods. Now that was the number of reverse repos that were happening back in 2008. These major banks were borrowing money desperately from the Fed every single day, representing nearly $500 billion at peak periods. So you may be saying, Tom, surely these major banks have learnt their lessons and haven't been borrowing any money from the Fed, not surely on a daily basis, and especially not 63% of all reverse repos, and surely nowhere close to $500 billion. Well, there's actually this screenshot of the reverse repo top users, and guess who the top users of the current reverse repo program are? We've got Goldman Sachs, we've got JP Chase, we've got Morgan Stanley, but we've also got some new appearances from Fidelity, from Vanguard, and from BlackRock. And we can see from the December reverse repo facility numbers that these top 10 ISDA banks or major institutions took between all 10 of them just over $1 trillion. So not only are we close or past to $500 billion in 2008, actually we're much closer to $1 trillion only from the top 10 major institutions. This really goes to show just how desperate these ISDA banks really are and just how on the wire they are to being margin called and going bankrupt. I think at the moment this is why we're seeing the stock market being so volatile, with many stocks jumping 5, 10 or 20% in a single day. These hedge funds are market makers, and major is the banks are trying to pump any of their stocks to generate any additional collateral they possibly can to avoid those margin calls. They're literally on the wire of a major liquidation, and that's why we're seeing pretty much every day at this point some stock that's up 40, 50 or 60% or even more. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.